Man, I do love myself some cheap Vechain. Hi and welcome to Cheeky Crypto. My name is Nick and today guys we're talking Vechain vet. We're going to be jumping down into the technical analysis for Vechain, taking a look at what's been going on most recently and what I kind of expect to happen next. There's some fantastic opportunities here, so as you get into this video, if you find it useful and informative, smash that like button. I do appreciate that. If you are new to the channel, then why not go ahead and subscribe, tap the bell, select all the notifications, and in doing so you will be kept up to date with everything that we do here at Cheeky Crypto. If you haven't yet joined us in Discord, check it out, linked in the description below. Fantastic community talking crypto 24/7. It's the first place we go to notify you of everything that's going on in the space. Let's jump right down into this one. So Vechain has come down very aggressively. Let's jump over into our daily time frame for this one because it is, believe it or not, in this bullish market, according to so many, a new lower low. Obviously, we don't have new lower lows in bullish markets. We're still in the bear market. I know it's an unpopular thing. A lot of people didn't want to hear it, but there we are. We are still there. Low at the moment sitting at 1.318 cent. We actually came down deeper than our expectations. We were talking in the last video, I can't remember if this was a public video or a member video, but in the last video we had scoped out 1.403 to 1.589, and we have actually come down into what I have dubbed my buy zone ranges. So we are all in this slightly larger one at 1.299 to 1.875. Now, with all of that being said, I don't think we're done. As you can see, the market in itself is getting ready for a big swing to the upside, right? We can see that. But there's a chance here that we have to kind of consolidate in this low range just a fraction longer before we actually get that move upwards. The next move to the upside should be significant, at least in my opinion, but it's going to be hard to tell exactly what it is until structure starts to form. Let's jump down into smart money concepts on the 1 hour chart. I think it's probably going to be the best place to start with. We'll just make this a little bit bigger. As you can kind of see, we came down very aggressively, well, obviously, as you know, right? We can kind of see here that we had 1, 2. This is looking like a zigzag pattern. This is looking more like an impulsive one. So it looks like we might actually find ourselves having to come down deeper than the current 1.318 at some point. It's going to be really difficult to kind of give us a bit of a time frame on that. We could just have the rug completely pulled from within us, or from underneath us, I should say. But yeah, this is one that we're going to basically be looking at DCA now, right? But anything below 1.5 seems to be great value for Vechain's vet token, in my opinion, right? So let's jump into this, right? What do we see on our 1 hour chart? So I'm going to move this around a little bit because this moves really large. It's quite hard to see everything, and so I'm going to have to move the chart around a little bit, so I do apologize for any jolty movements. You can see that we had the false flag of a bullish market right there, and that changed into a bearish market over this side. Well, basically what we're doing is ranging sideways. Now, as you can kind of see, this change of character here hasn't yet got a confirmation, like a CTS, a break of structure, to say we are definitely moving down. Obviously, it's moved down very aggressively, but it doesn't mean that you can't have a bullish change of character somewhere down here. Okay, so it's important that we understand that it doesn't mean that we have to push up higher in order to change the structure. It is still bearish right now, but I would like to see the confirmation. As you can kind of see, there's a lot of red all up in this area here. Let's just focus on those light red ones. Those light red areas are institutional level candles. These are big candles dropping on the market, basically creating imbalances in the order books, right? And so I just want to talk a little bit around the imbalances because I know I talk about them all the time. You can see the red ones here and you can see the green ones here, the fair value gaps, right? The fair value gaps are created when you create an imbalance in the order books. Let me bring up, hopefully this will work. Yeah, here you go. So this is just XRP on the chart, right? And we can see 2 order books on our BitGet exchange, which, by the way, guys, is my go-to exchange at the moment. So there is an affiliate link for BitGet down in the description below. If you haven't already checked out BitGet, I think you're missing a trick. You can get up to $8,000 of deposit bonuses just by using the exchange. More details can obviously be found on the link below, so do check it out if that's of interest to you. And if you do sign up using our affiliate link in the description below, you'll automatically be added into our weekly trading competitions, where basically you'll the winner will get $100 USDT. This is a weekly thing, happens every single week for the person who has the best P&L percentage return within that 1 week period, Monday to Sunday. So again, another benefit that for what we kind of do with BitGet, it's my go-to exchange. I use it all the time. So yeah, if it's of interest to you, considering everything that's going on with like Coinbase and Binance, why not check out BitGet? Affiliate link in the description below. But anyway, moving back to the order books. So when we have those charts, right, and we can see that we have those red or green fair value gaps that are created, what's creating that is basically the imbalance between sellers and buyers. It's illiquid, right? So the price has to move to where the sellers are or where the buyers are. And so when you have an imbalanced order book, you create these gaps in the market. And I will try and draw a few in here. I don't know if I'm going to be able to use some tools. Let me see if I can find, yeah. So here you can see there's a fair value gap that was right here. Okay, this little area. This one was created because there was an imbalance in the order books, right? And you can see how price wants to come back up and fill this range, okay? It doesn't always happen. It's not a guarantee, but for the most part, the price likes to come back and fill those gaps. We can draw multiple of these time and time again, and you can see how price will react to it. Right in here, there's another one that got left behind here. Price comes up and fills it, right? And so forth. So every time we see fair value gaps in the market, we can kind of understand that price is more than likely at some point going to gravitate back towards it. Okay, that helps us with our trading. So knowing where the price is potentially going to go, right? Don't use that solely on its own, but it's a good indicator that price might want to go back there. Now, it can take years before price goes back to those ranges. Sometimes it can take just minutes, right? So we can't be, really descriptive over when, but price likes to go back. That's kind of the point of the fair value gap. Very similar to the CME gaps as well. So when we create those imbalances in the order books, illiquid markets create fair value gaps, and then price likes to become liquid again, fill those gaps out. Okay. So let's come back into our chart. So we know that there's fair value gaps in here that have been filled out, and we see there's still some gaps on our 1 hour chart that have been left behind, right? So let's go ahead and focus. I'm going to just move this yellow box area out of the way. Okay, so as we can see, we pushed back up and we left behind these fair value gaps. Okay, so straight off the bat, we know that there's going to be at some point a probability that we're going to come back into this range of 1.446 to 1.479. Okay, we know that one is sit there as well. Now we have another one just up here as well. This one sits in at 1.508 to 1.520. Okay, so we know that there's two fair value gaps on the low side, but there's also three fair value gaps just above us here as well. So the market's going to be violent. I think it's going to bounce around a bit. Now, as I said, we can leave these ones behind for quite some time, and we can, of course, continue to move down. I suspect, considering that we are overbought on the 4 hour and the 8 hour charts, that we are probably going to be looking at a move to the downside. But before we do that, expect to move upwards because our 1 hour is oversold. So I would expect personally to see a little bit of a move up, nothing much, probably still finding resistance on that 50 EMA, which is our red line, and then probably coming down and filling out those fair value gaps. Okay, expectations are that we are probably going to be looking for some kind of fifth wave movement, unless it's on a 15-minute chart, so it's already there. It'd be interesting to kind of see how that plays out. We are below 50, below 200, and below equilibrium. We are in an incredibly bearish situation for Vechain, and that, my friends, is a buy the fear opportunity. Okay, so it looks like a big swing in the market is coming. Probably not yet. I don't know how to time the market. It's not something I'm going to get right, but it does look like it is there. Right, oversold on the monthly, oversold on the weekly, oversold on the daily. A big move up is due, and it might be on the back of the Fed doing no interest rate hikes, right? Pausing. And if they do pause, I think that's going to bring confidence back into the market. We also see the Hinman emails with XRP. That could also bring some confidence into the market when they start to see the corruption that is actually there at the SEC. These things stacked on top of each other could be a catalyst for another run to the upside. So this week's going to be interesting. Are we going to come down quickly, grab fair value gaps, and then rally? Or are we just going to rally? Can't really tell at this point in time. One of the things that I do know, though, is that we are right in the zone for accumulation. This is something I've been talking about for quite a long time, months. So it's good to see that the price action, let me bring this up to our daily, has finally come down into these ranges. Now, this is the first one I was talking about, the A, B, and C structure right in here. I expect a run to the upside, and then potentially another move to the downside, more towards this area of 1.1. Okay, and then obviously from there, I think we are done with the lows for Vechain. So potential here is epic in my opinion. I believe that Vechain has some true great utility, something that I think is very much needed in the future. If you're not familiar with the fundamentals, join us in Discord. We've got a whole host of content on the YouTube channel as well. There's lots to get your teeth stuck into, but I think long-term Vechain is a fantastic opportunity, whether that is for use case, whether you're looking at it and actually looking to use the technology, all the way through to speculative investment on the cryptocurrency side of things. I'm going to leave this video right there though, guys. If you have found it useful, smash the like button. If you're new, subscribe. If you haven't got an exchange that you like at the moment, check out 𝗕𝗘𝗪𝗓, linked in the description below. If you're just looking for a new one that requires no KYC, check out 𝗕𝗘𝗪𝗓, affiliate link in the description below. And guys, I will catch you all in the next one.
We are not financial advisors. None of what we have communicated verbally or in writing here should be considered as financial advice. It is not. Do your own research before investing in any digital asset or affiliate offers, and understand that investing in any crypto is risky. If you do, you need to be prepared to lose your entire investment. This video is for information and entertainment purposes only. All other videos are strictly personal opinions. Please make sure you do your own research and never take our opinions for financial guidance. There are multiple strategies, and not all strategies fit all people. Our videos are not financial advice.